Happy Wednesday. What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having an amazing Wednesday. Today's September 24th, and markets are slightly in the red. We got QQQ, which is the Nasdaq ETF, is down 0.5%, so 0.50%, about 0.5%. Nothing too significant, but looks like markets are de-risking and pulling back to the moving average on the 1 hour time frame. As you can see, right? Yes, markets are pulling back. Are markets bearish? No. Markets are still incredibly bullish. Remember, this is coming from someone that wants the markets to pull back. I'm not here to celebrate something that really has no ground for celebration. This is where, if you truly are a bull and you believe, your conviction is that you believe markets are going to continue to go higher, because that's what you guys were all saying last week, or just a few days ago when it was trading at 600. This would be the time that, hey, markets pulled back a little bit. Maybe you should load up, right? Because it's not just Nasdaq, right? And if you look at the 4 hour time frame, incredibly bullish, consistent higher highs, higher lows. We did break below the EMA on the 4 hour time frame. If we continue to show signs of progress, then it would be nice to see the retracement. Not sure if we're going to get there. Again, markets are still more bullish than they are bearish. But I just wanted to emphasize, again, I'm not saying that I'm buying the dip. I still think markets are incredibly elevated. I'm not the one that was saying that markets are going to continue to skyrocket through the roof because, economic data supports it. I think economic data doesn't support this rally. I think that markets are incredibly irrational right now. That's been what I've been saying for the past few months. But obviously, markets have been bullish. They have been irrational. They have been making new highs. So this would be where you can double down, right? Hey, markets pulled back a little bit. Take advantage of the dip buy opportunities, because it's a handful of different stocks that are retracing today. Look at this. TEM is down 4.89%. I personally believe that TM is a piece of crap company. It's due for a significant pullback. And I think that long-term, TM will not be here. With that being said, if you have conviction that TM is the future, you think it's going to go to, how everyone loves to say on Twitter, $100 plus, hey, get it for a discount. It was just at $97. If you think that this is the deal that you want to pick it up at when it's dropped about 20%, hey, if it does end up recovering, kudos to you, right? High risk, high reward. Yeah, it could possibly play out. That's a 22% ROI, but the list goes on. Oklo, right? I think it's incredibly overbought. I'm okay with sharing my opinion. But again, if you think that Oklo is the future, it's one of the highest performing stocks of 2025. People were saying, hey, this is going to go to $500 per share. I think it's a complete piece of crap company, pre-revenue, loses a ton of money every single year. And I think that it's due for a significant pullback. But if you are, again, so convinced that this thing is the future, hey, it pulled back a little bit. Maybe you want to load up on the dip. Same thing with Open. Open recently pulled on back for the past 3 days. Today's the first screen day. Possible reversal here. This one actually kind of would make sense if you have conviction that this is going to continue to rally. Because if Open and markets support, the recovery, that's a 35% recovery. It's all about, is it worth the risk? And if it is for you, I'm no one to judge. Like, we're all here for the same reason. It's to make money, right? To put money behind our ideas. I just hope that you do it in a calculated way, that your potential for profit outweighs the potential for loss. And honestly, I don't hate this, right? So if we pull this up for like a long position, if we do get confirmation above that EMA and we cut losses, depends on where you want to cut losses. It could be at break of support, which is right around almost $7, or you can cut losses a little bit sooner. And if it ends up making a recovery to those highs of nearly $11 per share, that's a 5-to-1 risk to reward ratio. That's not bad. That's actually very attractive. So I see the setup, but again, I don't believe this company is worth it. I think Open is an absolute piece of crap company that was dying. It had no volume 3 months ago at 50 cents per share, and enough people came together. They bought up enough of it and drove enough marketing to it that they pumped up the stock. I think all this is a glorified pump and dump. With that being said, there's a difference between a trade and an investment, and this is where I'm here to remind you, hey, if you have a lot of conviction that these irrational stocks are going to continue to pump up, put your money where your mouth is, right? This is where you can actually possibly make money, right? Just set up a proper game plan. You can't hate the player, right? You can't. What else did I wanted to show you guys? One other one. We got Nvidia, slight little pullback today, a lot of consolidation. That's not a pump and dump stock that this thing's been trading sideways for some time. So we got PLTR, a little bit of a retracement, not much of a deal. CoreWeave, not much of a deal, pulled back a little bit. I'm sure some of you guys saw what happened with Oracle today. They did a new share offering after it pumped up, 20%? Very clever, right? People say, no, this is no bubble. This is no bubble. It pumped 38%. What they did today is after it pumped up 40%, and just in the past week or two, Oracle reportedly seeks to raise $15 billion in bond sales. It's laughable how inflated and all the gimmicks that these companies are doing, taking advantage. And you can't hate these companies for doing that. It just shows these companies are really trying to reap the benefit of these irrational valuations. And for those that understand the fundamentals of that move, again, you can't hate Oracle for doing that. They're simply taking advantage of the position, the cards that they've been dealt. And it's a smart move. It's a very clever move for them. We got SoFi, we got HIMS pulling on back. Again, I think HIMS is going to come crashing back down to $40 per share. But again, it recently pulled on back. If you are convinced that this thing, people were saying that this thing is going to go to $100 per share. Hey, it just pulled back a little bit. Maybe you want to load up on it. So there's a lot of opportunity for those that want to load up on the dip. If you are, if you have the conviction that markets are going to continue to run higher. And I mean that. I do believe that, markets can continue to run higher. I don't think that there's any reason to celebrate these little pullbacks. That's all they are. They're pullbacks. I'm just more reminding you of hey, if you are so convinced that markets are going to continue to push higher, why is it all this big talk only when markets are pushing, but when markets pull back, then you freak out? It's no, this is the time that, you dig deep where the deals are kind of presenting itself in that sense. And if you are so convinced that market's going to push higher, this is the time to take action, is it not? But again, if there's those red flags are beginning to raise, hey, maybe actually I don't want to be super leveraged up here, right? Because you're right, these valuations might be a little irrational. They are pre-revenue. They actually, these companies lose a ton of money every single year. I'm sure you guys have seen people think that, again, it's all just an opinion, which again, you can take it as that, but Open, right? Open is a company that loses $305 million every single year in net income. It has a negative PE ratio. It's not a company that has been growing. Literally everything is screaming red flags. But irrational markets support irrational valuations. This is one of my favorite things. Again, this is from Investing Pro. If you guys want to download it, it's the first link in the description down below. You can get 15% off. It is an affiliate link. I just want to be straight up with you guys, but I use this software all the time. It allows me to be able to dive a little bit deeper and to do a fundamental analysis on this company. And very quickly, revenue. This is not a growing company. This is not a company that is scaling. It's a company that loses a ton of money every single year. Please, there's nothing wrong with trading Open if you have the experience to back up the trade, right? And you know how to manage risk. But please understand the difference from a fundamentally good investment to a high risk, high reward type of trade. I could never hate anyone for trading a pump and dump. It's we're all here for the same reason, to make money. Let's not sugarcoat it. And there's a lot of money to be made during irrational markets and these stocks pumping, but please see through the facade of this company is going to recover and it's going to be the future. It's not. It was a low float stock that was trading at 50 cents per share. Enough people came together and they pumped the stock price up. Fundamentals are not there. They've never been there. It's a dying company and all they're doing is riding the wave, right? So I'm very excited to follow up. I just wanted to remind the bulls out there that, we're pulling back a little bit today. I don't think there's any reason to celebrate because, again, you guys know that I want markets to pull back. But even during moments, hey, if on the 4-hour time frame, if we begin to trade below that moving average on the 4-hour, I'll start celebrating a little bit more then. Right now, there's no reason for me to be celebrating. I told you guys. No, none of that, right? Because today and yesterday, we might be we're selling off a little bit. We all know that markets can quickly recover. So let's stay level-headed. I'm just here to reinforce the same conviction you guys had last week, and its markets are going to continue to skyrocket. If that's the type of energy you had last week, where's that energy today, right? It's then you want to buy when dips are presenting itself and deals are presenting itself. Put your money where your mouth is, right? I think that's the great reminder that we want to have for all the people here. So very excited to follow up. Again, we'll talk about this a little bit more during our live trading session tomorrow. There's a handful of series of reports that are going to be released tomorrow for those that are not aware. Tomorrow is the GDP sales report, and also a big focus right now is the labor market. And we have initial claims and continuing claims being released tomorrow as well, 1 hour before the market opens. And then on Friday, just a friendly reminder, we have the PCE report on Friday, which of course is one of the Federal Reserve's favorite measure of inflation. And that's going to be 1 hour before the market opens. So again, if you want to take part of that, I do trade live with my LPP team every single morning. So just another reason to subscribe if you guys haven't done so already, to be able to be a part of our LPP team. It's the second link in the description down below. I trade live with them every single day. You get to see all of my good trades, all of my bad trades, but most importantly, you get to hear the thought process behind every trade I take. And for people that are visual learners, especially those that are just getting started, it's a great way to get plugged in if you value it. So if you want to check it out to learn more, second link down below. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.